Good morning to all traders and welcome to another Markets Wave. Stavros is here and we're going for another indices session. As always, it's Tuesday, the 31st of August. It's the last day of the month and we'll have, of course, well, to take into account that we have expiration of various corners, options, derivatives. So we're gonna do a bit of a special though today. I'm gonna look at DXY and USDJPY, but also the three big indices. S&P, NASDAQ, and Dow Jones. So it's all about the dollar today. Yeah. So jumping on the index first, we do know that we're expecting that to continue lower down. It looks like to me that this is probably a correction in wave 2, and we're going to see multi-structure move to the downside for 3, 4, and 5 internally, 3, then the 4, and then the 5. So we do need to break 92.50. Okay, that's the 61.8 Fibonacci retracement of the upside ABC leg of this 1, 2, 3 of this W, X, and Y pattern. Yeah, and we are to expect then after that the 92.20 to be reached. Okay, as you can see, there is confluence in both of those levels with retracement and the Fibonacci extension of waves 1 and 2 that we recently saw. Now, the RSI and the MACD, they don't really show any signs of like continuation to the downside, but this is usually when we get no signals on the MACD or on the RSI. But what we do see though, and that's why I mentioned, is we see some sort of bias to the upsides here for both MACD and RSI. So we haven't seen that playing through just yet, and I think we might do another leg down, okay, all the way down there, yeah, and then see that potentially coming in. Now, however, if we go down here from the RSI, this relationship is going to break, so the RSI will probably have no divergence, but on the MACD there's still some space here. Okay, we still see some there is room to move forward further down. Now, do note this though, yeah, momentum is turning bearish slowly, okay, and the two EMAs are both below the zero line, so those indications are looking bearish rather than anything else. Now, dollar yen, since we're considering the safe haven status of dollar and then also the safe haven currency yen, we see that this remains mixed, guys. Okay, that was the last time we've left here for a W, X, and Y, and that remains to be the case as well as we currently speak. I don't expect to see prices extending down here. That's why I'm looking for a triangle here. Plus, I'm looking for a triangle here because it does look like a triangle. So I'm not sure whether a wave D is in though. Okay, as you can see, we have some sort of mix patterns here, and wave D is expected to be long and complex as well. We can get a complex correction within a triangle, but just one. Okay, so the waves like C, D, or E are expected to contain complex waves, one-off, or some sort of, and this complexity is supposed to last a bit longer. So you see with this A, B, C done, my D might actually finish up there, and then we'll get E, and we'll move higher up, or D may be finished here. We'll have a deeper slope here, and we'll go down for E, which is going to give us the upside either way. Now, the other scenario is that, we're going to head lower down, and this is going to be, well, that is going to be W, some sort of X pattern here, and then Y, which means we can expect more upside because, well, essentially, we want we've done like the 61.8. We want to go perhaps up to maybe like the 90% or so. So maybe a flat is due or something, 110. Yeah, and we'll see how this is going to play out. Unless if that will be ABC 1, 2, 3. That does not look like an diagonal, so forget it. I was thinking about a flat. It doesn't look like a 5-way move. So that's for the dollar yen as well. No signs on the indicators. S&P, okay, just look from the bottom of 2193, we're still heading high for cycle wave 3. Okay, so there is more room to the upside still to go, okay, in the medium term. So what I'm looking here though is potentially this becoming an ending diagonal, or even it can just be a 5-wave impulse and ending around perhaps the 4631 or even above. Now I have placed the wave 3 here because this is the 100 Fibonacci extension of waves 1 and 2. That's the 100. Okay, so we want wave 3 to be at least equal to wave 1, since we don't have the 4th and the 5th, right? Because the wave 3 can never be the shortest. That 4631, it's my minimum, I would say, to the upside. And since we're expecting now, okay, this is looking like an ABC here and another ABC. Once we get wave 3, we will be able to draw, our top trend line. And then if we get a dip in wave 4 that penetrates wave 1, this is going to be probably a very nice diagonal. If we don't, we're just going to continue higher up with an impulse. And if we get an impulsive move rather than diagonal, most likely we're going to cross above the 4631 as well. Okay, so this is what I'm looking here. After that only, we're going to get a correction in wave 4. That's going to be the 15-20 usual percent correction that we see in stocks. And from next year, most likely we'll start picking up again slowly, okay, to complete this cycle wave move. So I'm looking at the bigger crash next year, okay. Let's look at NASDAQ here. NASDAQ is definitely more impulsive and it definitely looks more bullish, okay. So for that, look at this, guys. Again, similar move, right? We are let me just go a bit further out. I'm going to go on the 4 hours here, okay. We expect a similar move here. That was the 4th wave, and we are seeing 1, 2, we expect 3, 4, and 5. So you can understand, and then we're going to get the 4th and the 5th, right? So you can understand, again, it's a similar approach. However, the structure looks different, okay. We're still waiting for wave 3. Here we're a degree lower down, but we've done 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, 1, 2, 3, and 1 and 2. It's clear that we've done 1 and 2, and currently moving up for the 3rd, okay. But I will be honest, I have a feeling this is going to turn like a diagonal over here, a shorter shorter duration one, because of the volumes. Okay, because guys, when we are in wave 3 here, even internally in the wave 5, we have to see increase in volumes. Okay, the increase we see in volumes are here, like on the support. Okay, we need to see increase in the wave 3 of this wave 5, as we equally see, for example, well, you see that's like the 3rd one, although it's the last of the 3rd, but still, wave 3 are the ones that we see usually volumes increasing. So in this particular case, we might do indeed turn into a zigzag over here, for an 8, 1, 2, 3, 4, 5 and down, or we might as well continue higher. We never know what is going to play out, but we are in the 5th wave of a third wave, so it's not really critical that we see volumes increasing much, because we're on the 5th wave. That's the last one. So the last wave usually has low volumes. But either way, I'm looking for more upside here, okay? And that will be the minimum target, the 1581. In case we get that correction here, most likely it's going to end up being a diagonal. You know why? Because if it's not going to stop here, it means that, it's going to extend higher, because the truth is that currently the wave 1 that we're looking over here, and 2, it doesn't even get us to the 100 wave 3. So my wave 3, this one, being impulsive move to the upside, 5 wave, not like a motive diagonal, is going to get us to at least 1595, which means we're going to break the 1581, okay? So that's what I'm looking for. NASDAQ here on the MACD and RSI, just breakouts over here of previous areas, previous zones. That seems to be adding bias to the upside, nothing rather than anything else. And now on Dow Jones, guys. we're looking at a similar move that is more more structurally looking aligned with S&P. As you can understand, the NASDAQ technology one, of course, the index is a bit higher because technology, a lot of technology stocks are actually doing fairly well. What similar then, 1 and 2, I'm waiting for 3, then 4 and the 5. Currently, we are in 3 of 3. Okay, so we still have space to go. That looks like a 1, 2, 2 and 2, and that looks like we're going to get the 3, then the 4 and the 5 again. It can be a diagonal or it can be an impulse. But in this scenario, most likely a diagonal. Why? Because we've got ABC first of all, and second, because it looks slow. Okay, it looks slow and doesn't look impulsive. And the diagonals mainly have some sort of pattern like this. They don't really look impulsive. Okay, they look something like a gradual move to the upside or to the downside. That's why that reminds me of this. The other scenario, of course, is that this is our 1 and 2. I'm going to get 1, 2, then 3, 4, and 5 internally. And you know how that goes. That is going to, of course, give us a move to the upside that's going to be much larger to what we expect. Now, the longer, you know what? Actually, I'm just going to go for the primary one. Sorry, yeah. Just look at a bit of the closer degree move, shorter time. Since we've done 1 and 2, we'll go to 161. You see, 38K. Okay, and then perhaps maybe the 2. So I'm looking at this primary wave 3 to end around the 38K. That might be even where 5 is likely to end as well. And then for some sort of confluence, guys, we need to get this and this internally. Yeah, oh no, sorry, we need to get the 3 and the 4 since we have them. And look at this, we need to go to 1. You see this area between 38 and 40 is quite critical for me. Okay, so I'll be looking for more upside on all of them. USDJPY mixed, probably a bit more up to do the D wave of the triangle, and the index more downside as well, perhaps a temporary stop at the current level before the continuation to the downside. So I hope this is a helpful video, and we made it like a special just to give a bit more emphasis on the stocks, which currently are, well, many people are wondering what is going wrong, really, especially after the Jackson Hole Symposium and Fed's speech. So I will see you again tomorrow, guys. Take care, and as always, do not forget you can leave your comments on our YouTube section. I'll get back to you as soon as I can. Thank you for watching.